Hello everyone, welcome to a podcast, a webinar by Alpha over Beta. My name is Alon and I am the co-founder of Alpha over Beta. We've decided to make this video for everyone in the financial markets, especially in these very challenging and difficult times, so everybody can have the complete picture, understand what is going on, where are we, where are we going with this, what can happen. What does the past mean? Why did everything happen? And we promise not to use the financial jargon to keep everything as easily understood as possible. So I have an array of resources here that I'm going to maneuver between, so we can have the entire picture between all of us. So the beginning, let's just jump right to the markets and see market action and where it is. This is the market at a difficult time. In the market, we were at the top of 340 about a month ago, and then the market just tanked to the area of 235, which is where we stand right now. Let's discuss, first you'll have to excuse me, no corona, I'm a little bit under the weather, so if I sip a little bit of tea, that's just so I can continue the talking and the discussion going, and so I wouldn't choke on any cough or anything, all right? Just a reminder. Okay, so where are we? The market right now stands at 235. This is definitely the lowest point we've seen in this downturn. 235, if you want to look, let's just take it a bit backwards and delete the noise. If we go to the market of 2018, if you remember, we had a really severe downturn in 2018 towards the end, and guess where we were at the bottom of 2018 at the end of it, which stood right at 235. It's a bit difficult to see here. Look at the prices here, 240. A bit lower than that. Okay, so this level that we're standing in right now is a very important technical level. Now it's a level, it doesn't have to be a number, but we're definitely at that level right now. Okay, you see the red dotted line here, it stands at 235, which is a technical decision point, you might call it. All right. So what is it? What drove the market to be in such a catastrophic state? Is this the reaction of a market to a virus? Is any virus going to take the market down so badly? Is it going to happen every time? Why didn't it happen before? First of all, I'll have to say that I don't think it's the virus. It's not the virus itself. The virus itself is something biological that the World Health Organization and all the organizations that are locally in countries can definitely handle. They will do their best and they will find a cure and everything. What triggered this reaction to the virus is the fact that the economy stopped. Now, why did the economy stop? Because of the virus? In my view, what stopped the economy, what halted everything, is not the virus itself. It's the overreactions of government. And I know I'm going to get a lot of angry people over this, and angry comments over this. But I think it's overreaction of governments to the virus. Now, in order to contain the spread of the virus, and in order to make sure that the health systems in countries can definitely take care of the people who got infected and make sure that they will get better, they had to halt all the economic activity in countries around China, Europe, and the US and the Middle East. Now, that reaction to the virus spreading, to make sure that health systems can support the spread of the disease and not overwhelm the health systems, is what caused all of that severe steps that we have seen that governments are taking to make sure that the spread is slowing, not stopping. They can't stop the spread. This thing will probably cover the entire globe. It's just a matter of time. So in order for everybody to, all the countries, make sure that the health system that they have in their countries can support the spread, the rapid spread of the virus, government had to take some extreme measures. And those measures that were taken by the governments are extreme measures that were never taken before in any virus case. And those measures were to halt the spread, and they did steps like complete blockage of people in their houses, complete lockdown, no going out to work, public transportation narrowed to a halt, no flights in and out of any country. The recent announcement by Trump is that they're going to stop inbound from Europe, and any other measure that is moving the economy forward had to be stopped. And therefore the reaction to the virus by the governments with those measures, which time will tell if they were correct or not, this is what causing the current stoppage and everything that just halts. Now, the fact that the economy stops is a major shock to many economies and many countries and many companies. Now we can take a look at just a number of really easy examples. Let's take a look at Boeing, okay? Now Boeing had a difficult time regardless of the coronavirus. They had difficult time because of their 737 MAX airplanes that have a major flaw which they can't really fix very fast. And add to that the fact that there is no airline traffic right now, absolutely none, not from the major centers in Europe and in the US. And you have this recipe of what you see right here of the price of Boeing just plummeting from the height of 350 to below 100. Today it's a 96, 97 dollar company. This is enormous. And I think Boeing is headed for some severe, very challenging, very bad times for the company, because it has those two parts of the vice, just pushing Boeing from two ends. So this is an example. This is maybe an extreme example, but this is an example of what can happen to a company that has its business rooted in airline business and has already been in a difficult spot before the coronavirus. Okay, so we have let me just maneuver between those things. All right, so we have one power pushing down on the economy. The economy grinds to a halt. Companies do not manufacture. They have less in earnings. The bottom line is deteriorating, and the traders in the market are not willing to pay the prices that they used to pay, and they're willing to pay only lower and lower prices, and this is what we see right now. This is a major force, number one. The other force that is pushing the market down to the downside is the price of oil. Many companies like ExxonMobil and a lot of countries are depending on the price of oil for their economy. Russia, Saudi Arabia, and many other countries. Now, if the price of oil plummets from the price of around $55 a barrel to $40 a barrel and hangs around there, that's fine. But right now we're in price levels of $25 a barrel. This is something that a lot of companies and a lot of governments can't hold because it's too cheap of a price for a barrel of oil. They can't sustain that price for a long time, and it's not economically efficient for them to sell something such as a barrel of oil for $25 a barrel. Now, the fact that the price of oil is dropping is mainly because the guys at OPEC, all those companies in OPEC, just sat down to make sure that the price of oil doesn't drop before it dropped, and they agreed to cut down on production, but Russia had to make an opposite statement and flood the market with its oil. And because Putin made that statement, Saudi Arabia jumped on the fight from the other side and said that they were going to flood the market with their barrels. And here we have the supply-demand classic example of what happens if you have a flood of any commodity. And oil is the example. Let's see the price of oil here. Okay, that's USO. Okay, we see another drop today of 17%. Price of oil just keeps plummeting. Another thing is that the oil is an indicator of the economy. Oil should sustain itself at a certain level of prices in order for the economy to be progressing. Now, when prices of oil plummets like that, it's a very bad sign for a lot of companies and countries. Low prices are not always good. Sometimes it's bad news. In the case of oil, Putin, Saudi Arabia, we put everything in perspective, and now we see why the prices of oil are going down. This is also another force pushing the market to the downside. Another major force that is pushing the market to the downside is the Fed. Federal Reserve of the United States had decided to cut rates dramatically by 1% to a level of 0 to 0.25. And that really it was supposed to serve as a support for prices and stability, but it did exactly the opposite, because if traders and investors were thinking that maybe we're going to have a recession, or maybe we are already in a recession, they took that news of Fed rate cuts as a confirmation of that, confirmation that the fact that we are in a recession right now. Instead of taking that as news of, all right, they're lowering the rates, encouraging business to do, to companies to have some business, and then they didn't take the bad side of the news, the good side of the news. They took the bad side of the news, of a confirmation. Yes, the Fed just said that we are in a recession or going to be in a recession. So that pushed the markets even further and causing two market halts, and it's something that didn't even happen in 2008, and the market just tanked. Let me just go back to the S&P. The market just tanked as a response to that. All right. So this is another force that is pushing markets to the downside. Now, the Fed did another thing. It just took its entire arsenal of tools, whatever it has, and it has a lot of firepower, and just fired everything at its power. It did. Let me just check my lists so we don't miss anything. So we see whatever the Fed did. The list is so the Federal Reserve reduced the target range for a Fed rate cut, we said, by 150 basis points in some emergency meeting that they had, introduced a 700 billion quantitative easing program, and then launched another 1.5 trillion and repurchase operation, okay? And that's not the end. It just announced a new commercial paper credit funding facility and established a primary dealer credit facility, meaning they enable, let's translate all that to enabling business to borrow money at a very, very low rates, so they can borrow the money, pay the people, and continue to push the economy forward. But the fact of the matter is that the traders, again, in a pessimistic environment, took the bad side of the news, meaning the Fed has no firepower left. And I think this is a very big mistake by Powell, the head of the Federal Reserve. He just made a big mistake. He just took everything in the arsenal and just fired all at once. No measures taken, just one big bang, hoping to solve the problem. Problems like that do not solve. It's in one big bang. It's a process, and we have to understand that it's a process. It's a process that's going to take a few weeks, maybe a few months. Now, the prices are low because traders are pricing in the fact that the coronavirus, the price of oil, the lack of firepower by the Fed, and recession fears that are actually validated by the Fed, they're all in. Okay, they're in the price now. So you're not gonna pay for a company like we've seen Boeing and ExxonMobil if you think that the company is just going to stop. All right. So the traders are pricing in all those risks into the price, and at some point, the prices are going to be fair with the risk. Now, when that equilibrium is going to happen, traders are going to stop and look at the prices and say, okay, all the risk is already factored in. So the risk that we know of, and we mentioned the factors, I'm not going to go over them again. The risks are there, and the traders and investors are pricing in all the risk and then some. Why and then some? Because we don't know everything. We don't know all the risk. We don't know all the risk factors. And once we do, all the risk is inside the price. And now the market is ready to breathe again and move the economy forward. One more thing we'll say about the markets is that they are forward looking. Okay. So they're not going to wait for the news about the coronavirus to be over and then start climbing again. The market is forward looking. Once they see that all the risk factors, and we mentioned all of them as we see them right now, all the risk factors are in. Once they see that, the market is going to have a decision, stand at a decision point and make the right decision where to go. All right. So, one more thing I would like to add. The comparison between 2004 and 2020. 2008 and 2020. In 2008, there was a complete meltdown of the market because of a financial crisis caused by the banks taking too many risks and toxic assets into their books, and the mortgage crisis just collapsed all over on the banks, and some of them went bankrupt. The difference between 2008 and 2020 is the 2008 crisis was based on a real liquidity banking crisis. Someone did something wrong. The banks took too many toxic assets and risks that they shouldn't have taken, and investment houses and banks were over leveraged on those risky assets. We don't have that right now. The current crisis is not really based on anything economically some catastrophic catastrophe. It's not based on any financial catastrophe, right? It's based on the fact that we have a virus that stopped the economy, which is going to move again once the virus is going to go away. There was no bubble. I'm going to get some angry comments on my head, I know, because of that. Because some people think that there was a bubble, but I'm telling you, there wasn't. In my opinion, there was no bubble. There is no really financial catastrophe that's going to take the market more than 30%, which is about where it stands right now, and down from there. The 2008 crisis was really based on a financial crisis. The banks, let's say, did something wrong, all right? This time, no one did something wrong. It's a virus. No one introduced it into the system, and it's just the reaction of the governments, we talked about this, that halted the economy, all right? So in this case, I see the rapid move downward. I agree with the rapid move. If you can see 2008, we can go to 2008 just to compare. Let's go to 2008 for a minute, and we'll see how long did it take the market to really collapse. In a minute, it will load 2008. All right, once it gets there, you'll see that it took the market from October of 07 to March of 09, which is about 6 months, to collapse. Now, we've collapsed 30% in a month. All right, so this is a really nosedive. So I acknowledge that, and that's true. But back then, it was a process of discovering more and more toxic assets, and more catastrophes. We're not there right now, all right? So to conclude, I think that there are a number of really negative forces that are pushing the prices downward. They're doing that because of uncertainty, because of forward-looking of pricing all the risks inside. Once the equilibrium of risk and prices is set, I think the market will be in a point. Sorry, I mean, I promised you, didn't I? All right. The market is going to be at a decision point where they make a decision whether to turn up or continue to wobble its way where it is. Okay, but I think that we're in a decision point right now. Going back to technicalities at 235. Below that, it's going to be uglier, and if we can hold that 235, let's say 230, 240, if we can hold that level, I think the market is ready for a breather. All right, so hold on. Don't let panic control of your assets. Emotions are never good when it comes to trading. You have to know to control those. Stick to your strategies. Wait for better days. Go to alpha over beta to know what's going on. And I wish you happier trading days. So thank you for watching. And if you have any comments, please mail them to Alon at alphaoverbeta.net, ALON at alphaoverbeta.net, and I'm more than happy to comment, review, have a discussion, and of course answer all the questions. See you on the next webinar.